Hello and welcome everyone to Gold Asset of the Day for the 13th of October 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, what do you need to be aware of? Well, first of all, with regard to hedge funds and money manager positions, we have seen a 7% increase in the position for gold in the last week. So of those hedge funds that have a position on gold, 64% are currently long. With that, last week, we did see gold prices break out to 2-week highs, hitting $1,780 per ounce. That enabled us, in fact, to bank profits on our position that we entered at $1,727 per ounce. But not only that, we also banked some big profits on 3 positions on palladium, 5 positions on copper, and also a position on platinum. In total, we banked 6,715 points profit in the last week. So of course, for every 1 lot contract that you'll be trading, that's $67,000 of profit. For every 10 lot contract that you'll be trading, that's $670,000 of profit. Just in the matter of 1 week, we saw a massive breakout to the upside for palladium last week that we talked you through in a lot of detail on the previous week ahead commodity report. We saw over a 3,000 point breakout to the upside, and with that we had 3 positions on palladium, so we were able to capitalize on that massively. Not only that, copper prices of course as well, breaking back out towards 1-month highs. We've also managed to capitalize on that with 5 positions, and last week platinum prices broke out over 800 points in 2 days, which is very common once China are back from their 1-week golden week public holiday. With that, we saw a lot of capital come back into the metals. This is exactly what we talked you through last week. Look out for opportunities on selling pressure over the course of the beginning of the week with Asia Pacific and China in particular on their public holidays, thinner liquidity. That would cause selling pressure on the metals and an opportunity to buy in lower. Later on in the week, once Asia came back from that public holiday, we saw gold, silver, platinum, palladium, and also copper all break out on Thursday, Friday. In fact, on Sunday's open through to Monday, palladium prices, they surged another 1,000 points to the upside. So I do hope that many of you have been able to capitalize on these recent moves with the metals. It's certainly been extremely profitable to do so. So with that, what can we expect now for the remainder of the week? Well, on Wednesday, we have the minutes of the FOMC. Of course, this creates volatility and an opportunity to, of course, trade that volatility as well. So what I would look at this week for gold in terms of the range, I'm looking at support to be coming in approximately at $1,740 to $1,750 per ounce, and a potential retest back towards the 1770 to 1780 level over the course of this week. Usually, middle of October is very range bound for gold, so you can just take advantage of that tighter range. We've still got a position on here on gold at $1,727 per ounce, so we're still making sure that we're taking advantage of this volatility that we're seeing at the moment. We want to hold that position as we progress throughout the month of October. It's normally right at the end of the month where October can deliver for the metals, gold and silver in particular, before they then correct again as you move into the month of November. So with that, that just gives you a little bit more color on what we're expecting at the moment for the remainder of this week. And again, I do hope that you managed to capitalize on the dip last week as we outlined for you. That was a great opportunity to build in at the lows and then take advantage of that impulse move higher. Ditch those outdated technical analysis strategies and gimmicky indicators. Listen, you can teach even a 3-year-old to draw on pattern and lines on a chart, and they can call themselves a technical analyst. Technical analysis is the first thing everybody learns. You really need to evolve your trading process beyond this very simplistic using lines and patterns on a chart in order to make your trading decisions. There's a lot more to it. This is where you want to be utilizing a research-driven approach in the market, utilizing statistics, data, market intelligence, the facts in the market. Learn and understand the daily, the weekly, the monthly, the quarterly cycles for each commodity. Understand capital flows. That will help you massively. Alongside that, the intermarket correlations, the ratios in the market, key areas of liquidity, macroeconomics, fundamentals, the key drivers and news items which will have the biggest impact on each commodity. Alongside that, what will give you even more edge is understanding how the hedge funds, money managers and banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.